So you've probably seen the headlines, right? Chinese exports are down, and everyone's asking if the world's factory is finally hitting the brakes. But what if the real story isn't about a slowdown at all? What if it's about a massive, fundamental swap out of the entire engine that powers its global trade? Let's get into it.
Here's the big question on every investor's and trader's mind. Is this dip in China's export numbers just a temporary blip, or are we actually watching a major turning point for the global economy? Well, the answer is a lot more interesting than a simple yes or no.
This is the number that really got people talking. A year-on-year drop of 1.1% in exports for October. Now, for an economy as huge as China's, any number in the red is a big deal. But what's truly shocking here isn't just the size of the drop, it's how suddenly it reversed the trend.
And this chart really puts it into perspective. Just look at the months leading up to October, it was all positive growth. And then, boom, it just falls off a cliff into negative territory. This wasn't a gentle tap on the brakes, this was a full-on stop that snapped a long growth streak and pointed to some serious headwinds ahead.
Okay, so to figure out what's really going on, we first have to understand what's not working anymore. Let's break down where this weakness is actually coming from.
And as you can see, this problem is all over the map. We're seeing some really steep month-over-month declines in major economies, from the UK and the Netherlands and Europe, all the way to key partners in Asia like South Korea. This isn't just one country tightening its belt. It's a pretty clear signal that global demand is weakening.
To really get a feel for this, let's just zoom in on one country and see this dynamic in action. The UK is actually a perfect case study for what we can call China's old export model.
Now check this out. When you look at the data for the UK, there's this fascinating contrast. The vehicle sector, which is mostly driven by EVs, shot up an incredible 36%. That's amazing, right? But here's the catch. That one bright spot just wasn't enough to carry the weight of the old guard. Furniture exports dropped by almost 18%, and the huge electrical equipment category fell by nearly 5%. The old engine was definitely sputtering.
But here's the thing. While that old engine is fading, a powerful new one is revving up, and it's often hidden behind those negative headline numbers. This is no accident. It's the result of a deliberate, decade-long strategy to move up the value chain. And this, right here, is where the real story is.
And you know, understanding this massive shift is absolutely crucial, because it all comes down to this: know China to do better business. When you can look past the old headlines and see where the new value is, that's how you save time and money with expert insights on China trade and investment. Because even with all that decline, you've got these incredible pockets of growth. Look at Singapore, up over 7%. Australia, up more than 6.5%. Even the United States is still growing. The key thing to ask, though, is what are these countries buying? Because that reveals the entire blueprint for China's export future.
So let's zoom in on Singapore. What's on their shopping list? Well, it's not phones or consumer gadgets. The real story is in industrial goods. Exports of ships were up an incredible 301%. And high-tech materials like unwrought nickel, a key ingredient for EV batteries, surged by 153%. You see, Singapore isn't just buying products, it's buying the tools to make products.
And that right there, that's the heart of what we're talking about today, the great engine swap. The old engine was all about selling us consumer goods, the smartphones, the furniture, the toys. It was defined by that famous phrase, made in China. But the new engine, it's all about selling the tools of production, the ships, the EV batteries, the integrated circuits. The new identity is becoming powered by China.
So what's actually in this new engine? Well, it's really built on 4 key pillars. You've got green technology, like EVs and the batteries that go in them. Then there are high-tech components, things like integrated circuits and memory. Third is advanced marine manufacturing. We're talking highly specialized ships. And finally, capital goods, the heavy-duty industrial machinery that builds everything else.
This engine swap isn't just changing what China sells, it's also dramatically changing who it sells to. We're literally watching the map of global trade get redrawn right before our eyes.
Just take a look at this. When you break down the year-on-year growth by trading blocks, the story just jumps off the page. The real star of this show is ASEAN, the Association of Southeast Asian Nations, with almost 11% growth. The massive RCEP trade pact is also growing steadily. Now compare that to the pretty sluggish growth with the EU and that sharp decline with the BRICS nations. The center of gravity for China's trade is clearly shifting closer to home.
And if we dig even deeper into the giant Belt and Road Initiative, wow, the trend gets even sharper. This chart shows that East and Southeast Asian nations like Vietnam and South Korea just completely dominate the top export destinations.
We're talking over 75% of the total. That region has become the undeniable powerhouse for this entire trade corridor.
What's really fascinating, though, is that this redrawing of the map isn't just happening on a global scale. Something really profound is shifting inside China itself. It's creating what you could call a new inland growth arc.
And this is where it gets really wild. Look at the dramatic contrast here. The traditional coastal export hub of East China, down a steep 15%. But look at the interior. Central provinces like Henan are up almost 14%. Yunnan in the southwest is up over 20%, and the Hainan Free Trade Port is just soaring at nearly 30%. The economic engine isn't just swapping out its parts, it's physically moving inland. So, what does all of this mean for you? How do you take this massive structural shift and turn it into a smart, actionable strategy? Let's build your playbook. All right, first things first, invest in the new pillars. Don't just think about the final EV. You gotta target the entire green tech supply chain. Dive deep into high-tech components, the chips and processors that make everything run, and explore advanced manufacturing, from industrial robots to all kinds of specialized equipment.
And number 2, follow the new geography. You have to prioritize the ASEAN markets. Their demand is holding strong, and their supply chains are getting more and more integrated with China's. And don't forget to look inside China. Your next big opportunity might not be in Shanghai, but in finding a sourcing partner in a rising inland province like Henan or Yunnan.
So here's the bottom line. The simple narrative of decline is really hiding a much bigger story of transformation. As China makes this historic shift from being the world's workshop to its tech and industrial powerhouse, the real question for you is, where are you going to place your bets?
Answering that question is exactly what we're all about here. This channel is designed to bring you practical knowledge so you can navigate business, investment, culture, and economic trends, along with real-world communication tips for anyone doing trades with China.
So please press like and subscribe now for actionable insights and win-win solutions. Don't miss the chance to understand and succeed in business with China. Thanks so much for watching.